Guys, this is S&P 500 weekly technical analysis for the week of July 22nd. Means from July 22nd, which is Monday, to July 26th, that will be Friday. Last week, S&P 500 gave up 2% in the entire week, or 3% from the top to bottom. However, this was no surprise because it was supposed to happen. And why it was supposed to happen? Because S&P 500 was heavily overbought and heavily saturated on the weekly chart as well as on the daily chart. However, any fall was expected to be limited to the zone which I have disclosed in the previous S&P 500 technical analysis. And losing the zone means more fall. Now question is that what is this 5497? 5497 was the absolute bottom which the S&P 500 hit on Friday. Other than absolute bottom, it is my calculated support level. And other than that, this is the 23.6% of the favorite retracement level. And at 10:30 a.m. Eastern Time, in my first update to my Patreon community members, I have cleared that now the S&P 500 is weak and now this 5497 is in the picture. And this is expected to be the absolute bottom, and then S&P 500 will bounce back from here. Now question is that does this fall indicates a short-term correction or a bearish movement in the S&P 500 and in the entire US stock market? Then no. No, it does not confirm a short-term correction or a bearish movement, because a confirmation will come through the Dow Jones. And why I am saying a confirmation will come through the Dow Jones, the reason is there is that trend line. If you notice that the last closing in the Dow Jones was above the trend line. And this is exactly what I mentioned to my Patreon community members on Thursday, that it is very, very unstable and it can fail now anytime, any moment. It failed, it came down, it tested, and it closed above the trend line. This means that as long as Dow Jones is sustaining above the trend line, sustaining means closing above the trend line, there won't be any more fall or any more good fall, or there won't be any short-term correction. But certainly if the Dow Jones loses the trend line and closes below the trend line, two consecutive closings below the trend line, then S&P 500 will enter into the short-term correction towards 5,300. So I will discuss all of this in detail, that what is going to happen in the next week and how that is going to happen and why that is going to happen in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart is the big picture. Now because of this some good heavy fall, the S&P 500 has cooled down on the weekly chart. However, it is still heavy. It is still heavy. This means that we can anticipate one more red candle. But I am not saying that this red candle will be heavy. This may be a little... This may be a very thin red candle or a very little red candle. Okay, it will actually depend on that what is happening to the trend line. Okay, in case of the Dow Jones, as simple as that. If the Dow Jones loses the trend line, then definitely there will be heavy candles, more fall, heavy fall. Okay, if the Dow Jones sustains, in that case a reversal. Okay, so weekly chart is the long-term picture. Okay, means for a week, for a month, for a quarter or so. Now, second point of the agenda is the S&P 500 technical analysis on the daily chart. Because of these three very heavy candles, very good profit booking, now the S&P 500 is 50-50. Okay, because there is a bearish crossover in the MACD and also the stochastic RSI is bearish. Okay, and almost the same picture is there in the Dow Jones, but Dow Jones is more bullish as compared to the S&P 500. And guys, let me remind you again, this fall has not changed anything. Still the long-term trend is bullish. Okay, there is no bearish trend, nothing. This is just a short fall, this is just the profit booking and nothing else as such. Okay, and now whether it will come down or whether it will sustain, it depends on the Dow Jones, the trend line of the Dow Jones. And there are two more factors that I will disclose, okay, in this S&P 500 technical analysis. Third point of the agenda is the probable movement of the S&P 500 from July 22nd, which is Monday, to July 26th, that will be Friday. Whatever is going to happen in the S&P 500 next week from Monday through Friday, I will disclose here in this the probable movement. So just like I mentioned last week that if the S&P 500 moves up even by 1 point, it will gain more weight, heavy weight, and in that case it will be prone to give up any movement anytime. This was further confirmed by the Dow Jones, which on Wednesday hit the absolute this saturation, okay, absolute overbought, heavy overbought condition became unstable, and then on Thursday it came down. And that there will be one more good or heavy profit booking between 5615 and 5700, so that was there, okay. So similarly I will disclose, okay, everything here. And guys, once again let me remind you that when I say the probable movement, I also discuss the probable movement in the first point of the agenda and also in the second point of the agenda. I discuss the candles in very detail. So I recommend you to watch all of these, the three sections, in order to understand what is going to happen, how that is going to happen, and why that is going to happen. So guys, now I am going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. Now guys, I am going to discuss the first point of the agenda here. This is the weekly chart. Let me write it down. Weekly chart, W as in weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. So guys, before I discuss the candle, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's talk about the candle. If you notice, a very heavy bearish candle, indicating heavy or good bearish sentiments, number one. Number two, it has partially engulfed the previous weekly candle. Why partially? Because for an absolute engulfing, the body of the candle, the body of this candle must engulf the entire candle from top to bottom. And why partial? Because from top to bottom this candle has engulfed the previous candle, okay, again top to bottom. All of this indicates bearish sentiments, bearishness, and also this can trigger a gap down open on Monday, or irrespective of any open, an initial bearish movement. An initial bearish movement to what? An initial bearish movement to the closing of the candle, which was 5505. However, any bearish movement, okay, initial, okay, or anytime intraday, that bearish movement will be there to test the 5497. Okay, so this is what we know. Now the real question is that how much S&P 500 is going to give up. So in order to understand that how much S&P 500 is going to give up, we need to look into the chart of Dow Jones. And here Dow Jones, okay, if you notice, it's a hammer. It looks bullish, but it's in actual it's a bearish hammer. Okay, generally this kind of bearish hammer, it indicates a reversal in the trend, not for 1 week or 2 weeks. Generally, okay, it indicates reversal in the short term, means for a month, okay, it may be for 3 to 4 weeks, for 2 months or so, okay. But because the closing was above the trend line, this trend line will counter the reversal, the reversal interpretation of the bearish hammer. However, this closing above the trend line will not help the Dow Jones to come down. Dow Jones can still come down. Dow Jones can come down, but the thing is that whether the Dow Jones will close below the trend line or above that trend line. It may be that for the entire day Dow Jones, okay, it was trading bearish, and then in last 30 minutes or last 1 hour there was a sharp reversal and it closed above the trend line. Now when the S&P 500 comes down, okay, and if it trades below 5497, which is my calculated support level, as well as the 23.6% of the fib retracement level, if it loses, in that case it will come down. I'm not sure if it will be able to hit the 38.2% of the fib retracement level, which is around 5399 or 398, or let's say 5400 in simple words. Okay, 5400, because for the 5400 to happen, Dow Jones must come down, give one closing below the trend line, one good heavy closing below the trend line, and the next day it should trade bearish, but then it should give an intraday reversal so that it can sustain bullish. And in the same manner, the S&P 500 will be giving up by like 2%. It will come down, will test the 38.2% and will reverse. But again guys, I'm not confirming that it will come down and hit 5400 in the next week, because it actually depends on the Dow Jones. The closing of the Dow Jones is what is not allowing me to confirm that there will be 100% okay a hit to 38.2% fib retracement level. Anyway, so now let's look into the technical indicators, and through the technicals you can clearly see clear fan out in the moving averages. Okay, moving averages bullish, Ichimoku cloud bullish, Bollinger Bands bullish. Okay, and MACD is bullish. Stochastic RSI is still okay in the bull side and heavily bullish. There was a little crossover, okay, but still it will be considered bullish. Overbought, yes. Saturation, yes, but not heavy, okay, as it was in the previous week. This means that S&P 500 is still 90% or 95% bullish or heavy bullish on the weekly chart. That is why I am saying that this one red candle does not mean that the trend has changed. No, the trend is still absolute bullish. Okay, so 90% bullish here, and the only change here is that it is now it is saturated and it is overbought. It is not heavily saturated and it is not heavily overbought. It is just saturated and just overbought. This means that next week there are good chances that it can come down. It can give a spindle kind of candle, okay, a thin red candle, and in that case there will be a reversal. But if the Dow Jones gives up, then the continuation of the bearish movement, okay, 1 2 3 4, and in that case it will be coming down to these the levels 5200 something or so. Okay, and that is also the 50% of the fib retracement level. Okay, and here in case of the Dow Jones is technically okay, it is stable and bullish. See, moving average is clear fan out. Okay, there was also a slip confirming the bullish movement. Moving average is bullish, Ichimoku cloud bullish, Bollinger Bands bullish. And as I mentioned earlier last week, and I'm telling you this for last 2 3 4 weeks, that MACD of the Dow Jones is still trading bearish. All other technical indicators are bullish, no doubt, but MACD is still trading bearish, and especially on the weekly chart. This means that a sudden fall, a surprise fall, or a heavy fall, it can come anytime, and this will happen purely because of the MACD. Okay, so it doesn't matter that what all other technical indicators are doing, but as long as the MACD is trading bearish, okay, there will always be a fear of the bearish movement, which can happen anytime, and whenever that will happen, it will happen heavily. Okay, that means the bearish movement will be heavy. Now the problem and the fear is still there in the picture, because still there is no crossover in the MACD. MACD is still trading bearish. Stochastic RSI is bullish, yes, no doubt. All other technical indicators are bullish. This means that Dow Jones is 80% bullish on the weekly chart. So overall the picture is that S&P 500, Dow Jones, or the entire US stock market is bullish, okay, or good bullish, okay, or you can say in some manner heavily bullish, but it is not absolute bullish. Secondly, because of the MACD of the Dow Jones on the weekly chart, there is still a fear that the stock market, entire stock market can give up anytime. Okay, a good fall can still be seen. If the MACD of the Dow Jones on the weekly chart forms a bearish slip, then be ready for a short term correction. Okay, there will be no doubt. So I hope the picture is clear here. Now guys, I have one more information to share with you, that this is my S&P 500 knowledge transfer program, or the stock market knowledge transfer program. Through this program, I teach the movements, strategies, trend analysis, technicals, predictions, and much more. The motto of this program is to help you become self-reliant, and this program is delivered one-on-one basis. Okay, and whatever you are going to learn here, it will be applicable to any stock, any index, any currency, any commodity, any crypto, or anything that is traded in the stock market. And if you have any questions that you want to ask related to this program, or if you want to participate in this program, then this is my email address. And for more information, this is the Google spreadsheet. And when you open this Google spreadsheet, then you will see that there are these three levels, three tiers. And also I have disclosed everything what I am going to discuss in detail, in very detail. Okay, so basics to advanced. Okay, and I will share my modified technical indicators, the trading strategies, options and options trading, okay, in detail, and all live options calculations. I will tell you how to use the options calculator, how to predict the options premium price even before the index, okay, or the stock touches that the strike price. Then in detail, the option strategies, the calculated support and resistance levels for next 5 years, and how to analyze the movement and the trend of the stock market, and how to understand, how to figure out, or how to avoid falling into the traps. Then all of these, and then these are some important terms and conditions. These are the snapshots of the recent meetings. So guys, whenever you want to participate in the program, then this is my email address, or if you have any question, then you can simply send me an email. And I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. And this is the daily chart. So guys, before I discuss the candle, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's discuss the candle. Okay, this is the daily candle. Daily candle means one candle represents one day, not 1 week or 1 hour. And it's a good bearish candle, okay, or a heavy bearish candle, indicating. And also this bearish candle, okay, is the third in the row, indicating good or heavy bearish sentiments. Okay, however, this candle does not confirm any gap down open. This candle does not confirm any gap down open, but this candle certainly confirms that irrespective of any movement, there will be an initial bearish movement or there will be an intraday bearish movement. This is what can be seen through the candle, right? On the weekly chart, what we have seen, weekly candle was confirming a gap down open, or irrespective of any open and initial bearish movement. So this means that overall, irrespective of anything, there will be an initial bearish movement or a good bearish movement, okay, anytime intraday. And the S&P 500 is expected to breach 5505, which was breach or hit this the 5505. But most likely when it comes to 5505, it will also hit 5497. Okay, which is the 23.6% of the fib level and also my calculated support level. And when I analyze the last candle of the Dow Jones, okay, it's a good or heavy bearish candle indicating the bearish sentiments. Okay, but this candle does not confirm any gap down open. Okay, a gap down open is not seen. However, irrespective of anything, an initial bearish movement is there, yes. Okay, an initial bearish movement and also intraday, okay, some bearish movement is there. So overall, through the S&P 500 and Dow Jones, okay, it is confirmed that irrespective of anything, there will be a bearish movement and there are chances that we can see a gap down open on Monday. Okay, now let's talk about the technicals. Technically, moving average is clear fan out, okay, indicating bullish movement, but because the closing is below the moving averages, This means that now the bullish movement will be countered by the bearish sentiments, and moving averages will go neutral, neither bullish nor bearish. Bollinger Bands bearish, Ichimoku cloud bullish. Okay, mixed reaction is here. Now MACD is bearish. Okay, this is the big change. MACD is bearish, and also stochastic RSI is bearish. Okay, so these two are bearish, and if you have subscribed to my YouTube channel for last many months or years, then you know that whenever MACD and stochastic RSI, okay, whenever they are aligned to a particular direction, then that direction becomes the direction of the stock or the index. This means in this case bearish. Okay, bearish pressure. And the good thing is that now the S&P 500 is neither overbought nor saturated. Okay, so that is the good thing. This means that overall S&P 500 is 50-50. Okay, neither bullish nor bearish on the daily chart. Remember, this is the daily chart. Okay, but on the weekly chart it is still 90% bullish, and weekly chart is the trend setter. Okay, so trend is bullish, and in that the long term trend, the S&P 500 is neutral in the short term. Okay, so this is how we are going to interpret, right? Now one more thing, if you notice carefully, the K channel of the stochastic RSI has hit 0. Okay, and 0 means the bottom. Okay, bottom, I am not saying that this is 5,500 it is bottom. No, I am saying a technical bottom, just like there was a technical top. Okay, similarly there is a technical bottom. Okay, but this does not indicate that 100% there will be a very heavy reversal on Monday. Okay, this may or may not happen because only the K channel is bearish. If you notice here, in case of the S&P 500 as well as in the Dow Jones, both K and D channels, okay, both K and D become absolute 100, and especially in the Dow Jones, and that's why we have seen a heavy fall. Okay, on this day, Thursday, it become K and D become absolute 100 on Wednesday. Okay, so on Wednesday itself I mentioned to my Patreon community members that now any movement, anytime, okay, just be ready to see a good fall or a heavy fall, because now it is unstable. Okay, and on Thursday when it moved up further, then it has gained more weight. It has then it hit the historical the levels, the overbought levels and the saturation level. So it was clear, okay, on Thursday itself that now there will be some bearish movement in the market. So this is the S&P 500. Now the Dow Jones. Now technically, yes, technically a clear fan out in the moving averages, bullish, bullish through the moving averages. It is not neutral, it is bullish. Bollinger Bands bullish, Ichimoku cloud bullish. Okay, it is there. MACD is bullish, heavily bullish. Stochastic RSI is bearish. So Dow Jones will be seen 80% or 90% bullish, let's say 80% bullish on the daily chart, whereas we have seen that S&P 500 is 50-50 neutral, but Dow Jones is still 80% bullish on the daily chart. Okay, and also it is neither overbought nor saturated. So Dow Jones is more bullish and is in more comfortable position as compared to the S&P 500. So in my pre-market update on Thursday, okay, which I give to my Patreon community members before the open of the stock market, I mentioned that there are good chances of seeing good bearish momentum today because of Dow Jones, because the Dow Jones is trading at absolute overbought and saturation and is also overstretched and is very heavy in nature. That is why more bullish movement might not come in the Dow Jones for now. Rather, Dow Jones can lose some good weight, and when it does so, then the entire market will come under pressure, and because of that the 5550 will also come into the picture. Although after the first hourly candle it was clear that now the S&P 500 will breach the 5550, will come down to the next support level, but then it will again retrace back towards or to this the 5550. So guys, now considering the daily chart of the S&P 500 and the daily chart of the Dow Jones, it is very much clear that the long term trend is bullish and there is a short term weakness or short term offloading, but it will not be considered or it will not be seen as the change of trend. No, that is not there. For that to happen, a lot means 5%, 5 to 7% should, okay, the indices should lose 5 to 7%. Okay, this is just a short term break, a pause in the long term bullish trend. But whatever will happen in the stock market and whatever is going to happen in the stock market, I will keep you posted through these the daily and the precise updates of the S&P 500. And guys, it is not just about these daily precise updates which I give to my Patreon community members. I also give the stock market opportunities in the premium stocks of the US stock market, top 20-30 companies of the US stock market, minimum 5 to 10 opportunities to my Patreon community members. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will notice that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents only. So there is only the geographical difference and nothing else. So whenever you subscribe to either of these, then you will be getting the daily S&P 500 analysis, updates, probable movement, and opportunities in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday. And they know that what is going to happen and why that is going to happen and how that will happen. So guys, if you also want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. You can use that link in order to join my Patreon community and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 and also in a manner of the Dow Jones, that what is going to happen in the US stock market in the next week. That is for the week of July 22nd. From July 22nd, which is Monday, to July 26th, that will be Friday. So guys, once again, let me remind you that I've already discussed the candles, impact of the candles, the gap down open, okay, or the bearish movement, limited bearish movement and more fall, okay, in the first and the second point of the agenda. I've also discussed the MACD, okay, on the weekly chart and why there is still some fear. So if you have skipped the weekly chart and the daily chart section, then I will recommend you to watch those two sections in order to understand. And then this is the third section, in order to understand clearly what is going to happen, why that will happen and how that is going to happen. Although I will discuss most of the part here, but whatever I have discussed, okay, in those two sections, I am not going to repeat, okay, much, right? Now, a few things for the next week. Number one, earnings. Okay, earnings. So last week or last to last week, banks, okay, JP Morgan, okay, and these other banks have posted the earnings. Now Google and Amazon will post the earnings on Tuesday after market hours, means its impact will be seen on Wednesday. Okay, so this is one thing. Number two, on Friday, PCE and core PCE data will be released. So there will be heavy impact of this, the PCE and the core PCE data. Okay, so these are the two important things. Now in terms of the numbers, okay, and the technicals, so what we know is that, yes guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the numbers and the movements, it is very, very clear that on Monday, irrespective of anything, we are anticipating a bearish movement. This means that even if there comes a gap up open, okay, because the K is 0 on the daily chart of the S&P 500, if there comes a gap up open, then also there are very, very thin, very less chances that open equal to low condition will be there, okay, because of this heavy pressure. So this means that irrespective of anything, we are anticipating a bearish movement. This bearish movement may or may not be limited, okay. So any bearish movement if happens here, then 5 5505. This 5505 was the closing of the last candle. Okay, and then the absolute technical bottom was 5497. Okay, it was there, and this was a 23.6% of the fib retracement level as well as my support level. Okay, that is why it is very, very heavy. Okay, losing 5497 means more fall. Okay, and most likely in that case it will move towards 5400. Now 5400 is subjective. Okay, that I will discuss after some time. Okay, but this is clear. Now, to what extent the S&P 500 will come down? It will depend on the Dow Jones. Okay, not exactly to what extent, but whether that will go bearish or bullish, the Dow Jones. So how it will depend on the Dow Jones? If you notice, the closing was above the trend line. Okay, and technically what we know is that on Tuesday there was a bullish breakout. So if you are my Patreon community member, then check the pre-market update and the first update on Tuesday. Okay, I mentioned that there's a bullish breakout, means more bullish movement. Okay, at least for a day or two. So there was a bullish breakout. Because of this bullish breakout, Dow Jones moved up and then it came down. Okay, so in order to fulfill its technical obligation, and it has fulfilled its technical obligation. Okay, now if the Dow Jones sustains means, sustain doesn't mean that it will remain bullish, it will not come down. No, it can come down to hit this, the moving average. Okay, this moving average, right? It will come down to hit the moving average, it will sustain, it will retrace, and if there comes a closing, look into the closing on Monday. Okay, Monday closing. If that closing is seen above the trend line, in that case we can expect that there won't be any more fall, or any fall will be limited. Rather, this will be the resumption of the bullish trend. And this time when this resumes, okay, this moves up, means there comes this the bullish movement. In that case, the S&P 500 this time will be looking for 5700 or 5770 or so. Okay. Now, so this is clear that for the bullish movement, okay, a closing, not just one closing, continuous closings above the trend line, okay, is a must condition. And yes, there is one more thing. If there comes one closing below the trend line, okay, then wait for the second closing. So the second closing, so I'm not saying that on Monday there will be a closing below the trend line. I'm saying that Monday, Tuesday, Wednesday, Thursday, Friday. Okay, if any day there comes one closing below the trend line, then wait for the second immediate closing, the second closing the next day. If that second closing also is seen, consecutive closing, second successive or consecutive closing is seen below the trend line, then only this is a matter, okay, when you should be worried, because in that case, most likely, highly likely, the entire market, not just Dow Jones, S&P 500, the entire market will go for a short-term correction. Okay, now this short-term correction, whether this short-term correction will lead to the change in trend or not, okay, that will be subjective, because that is not expected to happen in 1 or 2 weeks. Okay, and for that to happen in 1 or 2 weeks, there should come heavy fall, 5 to 7% fall within a week. Okay, considering the movement and everything, and especially the earning season is there. Okay, so chances are not good that it will enter into the bearish trend, okay, or this 5 to 7% fall. But in simple terms, what we know is that as long as Dow Jones is closing, sustaining and closing above the trend line, entire market will remain bullish. As simple as that. Okay. Now in the bullish side, as I mentioned, 5700 or 5770. Before this to happen, 5700 or 5770. Now any bullish movement in the S&P 500 will have to face heavy resistance at the zone, the same zone I have disclosed earlier, 5550 and the other resistance level. Okay, so there will be a heavy resistance, and S&P 500 has to clear this heavy resistance zone. If it fails to clear this heavy resistance zone, then it will come down again and will hit the 23.6% and also this heavy support level, that is 5497. And in the second time, and if this happens, moves up, fails, comes down second time, Second time there will be a very good possibility and probability that it will lose, and second time also there will be a good probability that the Dow Jones will also lose that trend line, and then there will be no help, right? So this zone will play a very important role. After clearing the zone, after closing above the zone, okay, this is the 5550. After closing above the zone, it is free to move up. Now question is that it is free to move up to what level? It is free to move up to 5670. What is 5670? 5670 approx, it is 5669 point something, is the all-time high of the S&P 500. Okay, after clearing the zone, then this will come into the picture, and in that case S&P 500 in the first time it will not be able to clear that. So it will take 2 or 3 days to clear. Okay, this is the level. However, in case of the Dow Jones, okay, in the first go it should be able to clear its all-time high, that was 41,376. So we can say that in the next week S&P 500 is expected to trade between 5670, which is the all-time high, and the 23.6% and the zone, these two, okay, 5670 and the zone, provided S&P 500 recovers and regains the zone. Because once it recovers and regains the zone, in that case there is no fear. Okay, in that case it will be able to sustain, it will come into the comfortable position, right? Now comes the bearish side movement. Bearish side movement is very simple. For the bearish side movement to happen or the short term correction to happen, okay, what we are looking for is two consecutive closings below the trend line in the Dow Jones. So we are not concerned about the S&P 500. Okay, we know that S&P 500 itself is not going to give any absolute reasons, okay, to sustain or so. Yes, there is one reason. Okay, so let me first cover this part and then I will discuss that reason. This means that if there comes two consecutive closings below the trend line, okay, in that case most likely these two closings will be below the moving average also. In that case a short term correction, highly likely a short term correction. Okay, there will be one more factor that I will disclose once it happens. Okay, so whenever it happens, and if you are my Patreon community member, then I will disclose that one more reason, that particular reason will then give us 100% confirmation on the short term correction and to the levels where it will be heading to. Okay, two consecutive closings for the bearish side. Now yes, there is a short term, this is the thing in the S&P 500 as I have discussed on the daily chart. And what was that that short term thing? That short term thing was K equal to 0. S&P 500 has hit the K equal to 0 on the daily chart. If there comes one more candle, not one, I think we need two more candles, two more consecutive bearish candles, red candles. If that happens, then K equal to 0 and D equal to 0. And the S&P 500 will hit the absolute technical bottom, and then there won't be any more bearish side movement. Although after hitting the K equal to 0, S&P 500 has come into the condition wherein it can give any bullish reversal, okay, anytime, any day. But once the K equal to 0 and D equal to 0 condition is seen, means absolute bottom in the S&P 500, okay, in that case what will happen? In that case there will be a heavy bullish retrace, not a normal bullish retrace, a heavy bullish retrace. You can expect more than 1% it will gain within a day, 1 or 1.5% within a day. But the thing is that if this retrace comes, let's say S&P 500 is trading around these the levels, okay, and now there comes 1% or 1.5% retrace, then that retrace will be limited to either to 5497, okay, or maximum to the zone, means it will remain in the bearish side. Okay, when I say the bearish side, I am not saying long term bearish move, I am saying just the short term, okay, very short term. Okay, so it will remain in this, or it will remain weak in simple terms. Okay, means even after getting 1 or 1.5% bullish retrace, it will be coming down, or it will simply come down. So there won't be any more bullish movement, or any bullish movement will be limited to the zone itself. And now whenever S&P 500 comes down, in that case what will happen? In that case 5400 will come into the picture. Okay, what is 5400 approx? This is the 38.2% of the Fibonacci retracement level. However, I strongly doubt that in the current fall, or in the current movement, S&P 500 will be able to hit 5400, because before hitting the 5400, S&P 500 will hit the absolute bottom, and this absolute bottom will not allow the S&P 500 to hit 5400, and the S&P 500 will be compelled to give or to move up by a minimum of 1% or 1.5%. okay, and then a bullish movement, then a fall. This means 5400, okay, there are very less chances of seeing 38.2%. This can happen unless there comes a very heavy intraday fall, okay, continuously for 2 days, and this also happens in the Dow Jones, so that a short term correction is confirmed, okay, and then S&P 500 can come down to hit the 38.2%. okay, that will be there. But whatever is going to happen or whatever will happen, I will keep you posted through the daily updates which I give to my Patreon community members every day from Monday through Friday, the daily precise updates. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and then you will know that what is going to happen, why that is going to happen, and how that is going to happen. And guys, hit like if you have liked this video, and subscribe to my YouTube channel if you have not yet subscribed. And guys, this was my S&P 500 weekly technical analysis for the week of July 22nd, means from July 22nd, which is Monday, to July 26th, that will be Friday.